Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Appreciate you stopping by. Thanks, Marty. This stream is about integrating bookmap order flow tools with auction market theory using the volume profiles, the chassis, and the intraday developing time frame. It's about the business of trading. Trader Lab is a community of like-minded traders who come together to leverage their collective experience. It doesn't matter how long you've been trading or even what you do. What does matter is if you're not creating a sustainable business for yourself, in spite of the random winnings that everybody has, you might want to take a thought, look at what you're doing, look at where you keep waking up. And if you don't have a sustainable business, then you might want to call a timeout and try to decide, or at least determine, what is it? Why is it? And if you don't know why, you might want to come to Trader Lab. You might get some answers, and it might help you. I'm not saying it's for everybody, but what I will say is everybody who's done this business has walked in your shoes. We've all done the same things. The thing is, can you learn or get more information without reinventing the wheel? The wheel has already been created, but are you on the right track? How's that? So appreciate you being here. By the way, this is Labor Day weekend coming up. The U.S. markets will be closed on Monday. Also, just so you guys, a note to you guys, I will not be streaming next Tuesday, but I will be back on Wednesday. So I'm going to miss you all. Hope you miss me. And let's remember, we're in a bull market. The higher time frame is up, and the market's been on a rampage. And what might happen before a long holiday weekend? You think you might get some flattening out, evening up, long liquidation. That's how we start out today. Now, let's take care of business, and let's get into why we might anticipate selling. And I'm going to give you not only the logic behind it, but the actual market structure, building out a case. You know, the idea of a trade plan is you're making a case. It's almost like you're presenting an argument, if you will, in a court. And of course, the jury is out. It's the other participants, right? They're just like us. But if we have evidence, then it might give us an edge. So we're going to talk about that, because this is a business of edge. It's not a business of prediction and being right. I wish it was, but it's not. And we're all trying to be right, and we're all trying to predict, and all of that, know what's going to happen, get confirmation. That's us. Well, that's not the business. That is us. So we need to solve for something else. And I always talk about this, and I invite you all to watch these streams that I do, and especially the last couple days. The one that I think you guys ought to take a peek at, and it's in the Trader Lab, is targeting new all-time highs. That one yesterday, of course, and today. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a Drake calling room, but if we get there, we'll talk. And those of you who've been following the streams, I do get into real time, and I do show trades as they develop. However, here's the however. Before you could ever get to a trade, you have to know the condition of the market. And that's before the RTH open. Then when the RTH opens, you already know what might happen and where it might happen, assuming you have a process that might identify that. And then you already know what you'll do. That's what a trade plan is. This is not a video game. This is really a strategic endeavor. Now, grab your pen and paper. I'm going to give you a couple of notes. We are opening in range in value. So what does that mean? Well, nothing has changed except what happened in the ETH. If we open in range in value, that means the market's hanging out, and we know the market is long, and we know we hit a key location yesterday, which set up the longs. It's all in yesterday's stream. Let me come back here, and then we'll talk a little bit about a couple of other things. In fact, let me start here. This is how I start my trade prep. Now, this is yesterday. Yesterday, this was support. This is a high volume area. Now remember, this is not a complicated thing. It's just random. Trading is not complicated. It's actually somewhat simple. And you may think, why? Why is it so hard to do? Because rotations are random. So when you're in a random environment, that makes it really hard for us, of course, because we're trying to position on outside edges of rotations, no matter what time frame you operate in. So that's where we have our quote challenge. The rest of it, I don't think is that challenging. You can figure out, I believe, and learn how to trade in TraderLab. The thing is, there's psychological impediments, FOMO and, all these rotations stimulate primal responses, fight and flight, fear of loss, all this is going on. And then the rotations are random. So we're in an environment where rotations are random, but there is structure. And if we can understand how the market works or market mechanics, at times we can get in alignment. When we're in alignment and you're in TraderLab, then you already know what you're going to do and where you're going to do it. What you don't know is, will the market get there? How will it get there? And all of that. That's that random aspect. So if we can sort everything else out as well as we can, then when we bring our plan to the market, and if we actually have a viable plan, we have an edge. Then it's breaking it down into shorter time frames, if you want to think of it that way, and then operating where these trades might show up. And I'm going to show you that. Now, this is too low. Remember, high volume is shopping. You know how to shop? Shopping is trading, just that the pricing doesn't change. In our business, the pricing is constantly changing. So it's the opposite end of the volatility spectrum. You know how to shop? So if this is the retail price in all of this, the highest volume, and the market goes on sale, and now this is too low, what can we do? We can go up. That sets up a long. Now, what else? Let's look at this yellow line. Yesterday, RTH closed. This is the retail price. So this is like multiple time frames. These yellow lines are retail prices. If this is too low here, then we go up. If this becomes too low here, we go up. Everybody with me so far? It's simple. Yes? No? What do you think? How are we doing in YouTube? Everybody conscious? Not conscious. I understand unconsciousness. And if you're in YouTube at this point, your chin is probably on the keyboard. So, too high. Now, we don't know it's too high. This is the retail price. And it closed all the way up here, and we're up in this area. To the moon. Right? Or no. What is this? This is the ETH. Now, let's look at this. Now, yesterday, if you remember, let's go over what the key elements. 29, this area here, and this is all full session, okay? This is the low that set up this move up. And this is all in the previous streams, but there's support. This is the retail price in this. It's there, fair price. On this day, I come down. This is too low, and there's a tail here. Just watch. This is excess. So I got excess here, and notice the tail is there, excess. What do I do? Yesterday, I come down. I check the excess. Too low. Sets up our longs. And there's more reasons for the longs, but this. Now, this is our retail price that I just showed you. This is the ETH. What is the language of the market? Remember, this is a language. I don't use indicators. I speak market. Why? Indicators just created noise, conflict, and randomness. I'm in a random environment. What do I want to have random inputs? That's like putting, what's the old saying from early computer days? Garbage in, garbage out. So if I'm using random inputs and the gamblers or the other participants on the other side are using random inputs, then I'm sitting with them. The house, which I want to be, doesn't use random inputs. So I'm not using spaghetti. It's all random. And they all have winning trades. But I make a point of not using spaghetti and multiple indicators because if they're not absolutely the same, in alignment, all the time, exactly the same, then I have randomness. I can't measure randomness. I can look at my P&L, but that's not, in my opinion, a solution. It is really the problem. Again, just an experience, doesn't mean anything for you. This is the retail price from yesterday. This is the fair price. What happens if it's too high? ETH high. Then what? Well, if it's Friday before a holiday weekend, and this is the ETH this morning, and I check the retail price and it is too high, it's hasta la vista. See you later. Now let's go further. This is a distribution of volume, right? Now, what is this when you look at this profile thing? Well, it is a shopping thing. So if this high volume, think of your store, retail, high volume buyers and sellers are all excited. They meet, and they shake hands, and they do business. But what happens now if I come back here and now this price becomes too high? I'm going to reject it. If that happens, and now I start doing this, too high, too low, outside edge, I'm not. This is where the volume dries up, and I do this. Well, I know that's too high, and if I don't regain this, now this is my new retail price. This high volume. So you see the high volume here, and you see the same behavior here. What is it doing? Too high, too low, too high, too low, retail. Love it. Here, too high, I'm not paying that anymore. Well, we're going to lower the price. Too high, too low, too high, too low, retail. Up, I'm not paying that. Too high, too low, too high, too low, I'm not paying that. Too high, too low, too high, too low, I'm not paying that. High, too low. This is the new retail price. The overnight volume point of control comes here. That says for this whole session, this is the fair price. Up here for the whole session, that was the fair price. Down here for the full session, that was the fair price. What do I know? There's sell stops under here. And this is a potential target, and there's stops down below. Is everybody with me? What this does for me, it says shorts only, and if I can't get above this 6, which is the outside edge, or this, the 2 or the 3, then because if I rotate, this becomes something called mean reversion. Mean reversion is outside in trading. So far, for me, it has been only shorts, outside in. I can't pick the low of anything. I don't try. My job is to get an alignment. So too high. Now this is the RTH. I'm going to show you the opening trades, and I'm going to show you continuation trades. Where was our target? First of all, take out yesterday's low. Thanks for playing. All those guys get a coupon to the buffet. And where else? Where's my target? Here. Now, at this point, it's either done, and we're going to start doing this kind of thing, and it's still shorts for me, not a recommendation, or if we get under here, there, and then wherever, it's part of the joy. So I couldn't tell you what it will do. I do know what it might do. And then, as they say, act accordingly. Now, let me get into some statistics. I hope you guys are getting something out of this. How are we doing there in YouTube? Is everybody conscious? Please give a like if you're visiting. Also, feel free to review these streams. I think you can learn a lot as far as how the market works, why it does what it does. So, RTH open. Now, I'm going to show you the first trades, and this is not necessarily a trade that developing traders should take. It's the problem with the open is the speed and the volume that runs through. That creates a lot of volatility. So I always say developing traders study the open, don't necessarily trade it. Now, here's the thing. You can do anything you want to do. It's your business. However, the way I believe to do this is to isolate specific trades and then vet them. In other words, you just isolate the open. Based on the evidence I've presented to you so far, what do we want to do? We want to sell it. Hold on one second. I have to switch something around here. One moment, guys. Just take me a second. Hold on. Investor RT is my higher time frame software, and it exports levels to Bookmap, which is really convenient, I got to tell you. But it's currently exporting the current levels, which we don't want on here now. So this is the open. I get a sweep here, This long sweep doesn't give me any information. So it's here. And what do we know? Well, we know the ETH is short. We know we found too high. So those are the things we know. So for me, I want to get short. Now, the problem, of course, is where. Now, this is a trade I would take, but I also, here's something to think about. And I don't know how you would, quote, feel about it. When I use the term feel, I'm really not just talking, I'm talking very actively feel, like emotionally. And I am going to give you statistics. I forgot that. I got to do this. First of all, let me do this first. We're opening in value. That's value area low. So in range, in value. Okay. So that's how we're opening. What does it mean? The market is in balance. What do we anticipate? Well, either a two-sided trade, or if we break out of the prior day's value area, which is this, then we want to trade directionally. However, I already know the condition of the market, and that is long liquidations. Remember, there's more to trading than just a piece of spaghetti. You got to understand market mechanics and trader behavior. Long weekend. Do you feel lucky, as Dirty Harry used to say? Are you going to hold a long? Well, maybe. In the futures market, maybe not so much. Maybe if you're long and you're a position trader, sure. Me, not so much. I'm a day trader. So what do I anticipate? Those who are looking for continuation, longs from yesterday, are now underwater. What would you do when you get out? I don't know. Me? Yes. So what do we do here? Well, if it comes out of value, we're going to trade in the direction of the breakout. And if we get outside of yesterday's range, the market is completely rejecting the whole enchilada, and then we can go lower. However, there's a target down there. So now we have the pieces. Now let's look at the first trade. Statistically, by the way, lower in range, write these down. You have to vet them for yourself. This is all available in TraderLab. There is a 98% probability we take out either the first hour's high or low. I don't know about you. I'm leaning to the short side. What do you think? There is a 97% probability to take out the ETH high or low. Do you feel lucky? There's an 87% probability to take out the previous high or low. Based on where we're opening, do you feel lucky? You're going for the high of the day yesterday or yesterday's low to get those stops. You see how it kind of comes together? Value area low, 68%. Previous point of control, it's above us, not happening. Maybe. IB low, 62% probability. There's more, but that's enough, don't you think? So that sets the lay of the land. So everything now says get short. Now, what do I got to do? Get short. Is everybody tracking so far? This is all prior to the open. If you're not preparing like this, then what are you doing? Then you're just playing a video game. This is a strategic endeavor. I suggest you consider what you're doing and what you're not doing. If you're not coming in here with a sense of which side might get abused, and of course it can change, and we will get out of alignment, we will take stops. So let's get over it. What is a stop? Is it a personal failure, or is it just a probe in alignment with the current context? And if the context changes, which it can transition while we're in a trade, we're going to take a stop. If our location where we probe and sample the market is out of alignment, which is easy to do, you'll take a stop. Are you okay with that? If you're not, you're in the wrong business, because that's what trading is. You're taking risk for outsized rewards. Now, how do we balance taking these stops, with the opportunity to be profitable? For me, and I'm only talking about me, I take stops, so I got over that. I still don't like it. I'm disappointed. Okay, it's like buying a lottery ticket. Gee, I didn't win. But I'm buying tickets to ride that have an edge. So I know that the edge is not 100%. All I need is edge to get risk neutral. That's all I need. If my stop is 3 points, then I got to get 3. Minimum. And I'm talking about a minimum configuration. I'm not talking an ideal scenario. I'm talking a developing scenario. If I can get risk neutral, then I basically bought my ticket. And then I can either manage a runner or whatever. Now, the other thing is when you come to Trader Lab, we always talk about a minimum 2 lot configuration. The first metric is what is the percent probability of getting risk neutral before getting a full stop. If you have a positive expectancy, hold on a second. If you have a positive expectancy, then your job is really just to put the trade on and over time extract that edge. Even though you can have 3 losers in a row, you can have 3 winners. It's all random. So if you have edge, you're trading edge. It's no different than the casinos. They are playing edge. So let's look. Opening swing high. Now, when you open in range and value like this, the possibility is for 2-sided trade. So if you take a trade, and I was about to tell you, for me, if I put a trade on and my opening swing high is still intact, I already accept I'm going to get stopped out. If you don't think that way, then you're actually going to be more emotionally attached to it. Every time I put a trade on, I assume I'm going to get stopped out. It protects me psychologically, and I detach myself. I look at it more as a probe of location. I want to get short here, but how do I get short? It's a great question. I don't know here. Look, I get my buyers, and it could very well be a rebalancing of inventory from the ETH. I don't know. My ETH volume point of control is here. This is my retail price. Now, statistically, I don't know if I gave you that one, 80% probability. So if I open here, I have an 80% probability of going there. The overnight mid, which is above me, let me give you that one. That one has about an 81% probability. My probabilities favor this. So when I'm looking at this, I'm no hurry to get short. Just and I don't know, I don't know where the high of anything is. Remember, we don't know. Or if you do, come to Trader Lab. I have no clue. So what I know here is I had absorption. That's the red bubble, and that was absorbed. Otherwise it would have gone down. So I got buyers here, and it's probably short covering. I don't know. I'm guessing because I don't know. I come up here, and right here I see my sellers get below my buyers. Now, where have I seen my sellers? Other than this guy, where's my sellers? I mean, the delta. Delta. Where's my delta? Buyers, 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 seller, seller. See the change? So right here, I see a seller, and I'm going, oh, that's wonderful. I'm above this, I'm below this, and my teeth chatter because I'm clueless. Now, let's look out here. This is a microstructure. Now, you see it here, you see it here, you see it. But let's look as if this didn't exist. Let's come out to where we have nothing. What do I see? Volume here, too low, too high, but then I leave it. When I leave and I accelerate, it creates low volume. In other words, we're not hanging out. This is higher volume. Like, what do you think? Now, don't forget, this starts at 0 at RTH open. So now it's going up. And full session VWAP, I think, might have been here. I don't know. Not material to me at the moment. And it's going to the moon. And my location is here and here. Notice what was here. Liquidity. I break above it. Now, this can be an order flow trigger right here. And I'm taking my time. Watch. If I break below this and come back to it, I could sell it. If I break above it and I hold it, I can do nothing. I have to wait. I can't get long because I want to get short. That's the evidence. Where? There's the thrill. Now let's watch. I'm still not able to do anything because I'm not in a location. I'm in an area. There's no precision. And I'm looking still at this. So I'm, going, I'm perplexed, But I know I have my sellers here. So let's look. Now, the microstructure is here. So if this is too low, right there, and my retail price is here, I'm just showing you that, and I break above it, I have nothing. No short. Now, again, I'm looking. Now I get my sellers. Now I know I found my sellers. I also know this is my opening swing high. And since I'm in range, in value, I can just do this. So this presents a problem for me to get short, okay? Because we can just do this, take these buyers out in this leg, and then take the shorts out in this leg. Right in here, I'm looking for, based on the open and everything else, two-sided trade to get short. That's my plan, and I'm sticking to it. Here's what else I know. Too high, and now I'm coming below this area here. This area, for me, is an important level. I'm going to draw a little something on here for you. Remember, what is this? Over, under. Ring, bang, support, too high, no clue. Break low, liquidity comes in the book. I am here. They come in, notice the response. I can get short in here or up in here. Anywhere in here I can take a short, and I assume I'm going to get stopped out. Let me try to move this over here. I come back here. If I get a short in here, remember my assumption is I'm going to get stopped out. This is where the problem comes in this, because take this out and then take this out. That's the possibility. So you have to be willing to take your lumps, you know. Let's look again. What was here? What comes back here? I'm just trying to show you some ideas. Hold on. Come on, Bookmap. See? So I know this is here. I can lean on this for a short. I can take shorts in here, and my stop's got to be above this. If I put my stop, and actually it should be over the high of the day or here. If you put it there, you get stopped out. You'd be scaled or not. Let's assume it's a full stop. Let's just get real. You know, we all take stops. What happens here? Absorption, trigger, location. Location. Short again, back to here for a scale. Liquidity, you see it come in the book. See this? So this, you get whacked, you get whacked. This, there, scale, press, VPOC migration, potential continuation short or not. Where are we going? Outside of value, shorts only. This is mean reversion. Pull back. You could be selling this. The idea is if you let's talk reversion again. So once you fall out of this, and this is too high, and now we're down in here, now we're doing this. And if I come outside somewhere, I can sell it to come back there. It's the same trade as I was doing above. Outside, back in. Outside, back in. Developing volume point of control. And when I get down into what I consider to be fractals or different time frames, they're vertically integrated. I'm doing the same trade. I'm just doing it from out here to come there. So it's out there, come there, out there, come there. And then the target is down below. ETH low. What was that probability? I know you wrote this down. Let's go over this again. ETH low, 69% probability, and 97% probability to take out either of them. So I've got 97% probability, and based on the high of the move in the ETH was too high, I only know I'm going one way so far, and it's there. Scale. Then I get VPOC migration. Now, I've had no longs. Doesn't mean that long isn't a brilliant idea, but so far, not so much. VPOC migration. What is how do I trade this? I only have one way to trade, and that's short. And for me to trade now, I have to get outside for continuation trades. Now, let's talk about targeting. What was that probability of getting yesterday's low? Well, yesterday's high seems to be off the list at the moment. There's an 87% probability of yesterday's high or low. You feel lucky? Stops. Then what, you ask? Great question. This. That's the primary target. And for the moment, I'm done other than trading rotations. And I got to bring you back to where all this comes from. Right there. Right on the chart. So when we're trading this thing, the ETH high is there. So I look at the ETH and I see, oh, well, if I got 87% probability for the previous high or low, something like that, which way are you leaning? There's the retail price. I'm not paying that. Here, I'm not paying that. I'm not paying that. I'm not paying that. And I'm definitely not paying this. And short, take the stops, and there. The trade can be done. You back in the Barca Lounger. What else do you got to do? Now, what else do we do? Well, it's possible, and I don't predict anything, that we have the low of the day or not. If we do, what do? We're either done or the market is now going to balance out here and start rotating. If it does that, I can be now trading outside in, just trading a rotation. And of course, I can get squeezed out. That happens any day, any time. So I'm not too concerned with it. This is what I'm looking to trade, this now. And this is called mean reversion. So the volume is here. This is the retail price. The shorts are in the market, right? So the market can rotate, take these buy stops out, and come outside somewhere. Part of the thrill. And then if this is the retail price, it's called mean reversion. I'm looking only shorts to come back. So I can't trade here. I have to try to get it outside to trade back to that. And then to trade back towards this outside edge out here. So I'm not trying to take the low out. I mean, it can. And if it does, I have other trades because we go anywhere. But if the low of the day is in, I'm not trying to trade through it. I'm trying to trade towards it. So outside to there, and then just outside in here. And that's all I would be doing unless it changes. If I come under here and I don't regain this, I would then go for this. So that's my thing for today. That's all it is. It's not complicated. It really isn't. But it is random. Hold on a second. Let's just see what we got now. So what happened here? Too high, break low, test. We didn't get back here. So this is a trade I'd be looking at and I have the sweep. I have everything except the location. This is a trigger. This drops down. Too high. Too high. See you later. Let me mark some of these. So the way I work this is outside in. I only have one primary trade that I've shared in Trader Lab for this, and it is called mean reversion. It is the most common condition in the market. That is rotations. And what the market tends to do, since it's a shopping experience, is try to figure out what's too high, what's fair. And this fair price can change depending on where the volume is. So if this becomes too low down here and we spend more time here, then this yellow line is going to shift and then this price becomes too low. Out here, as an example, was too low. And then we wrote, and that here is too high, too low, retail, right there. If it's too high, I'm going to leave it. It's the same as leaving this in a higher time frame. Now, you may think this is difficult. I'm going to tell you what I believe is difficult is the random rotation. So that's difficult. Okay. This is potential area to observe on a retracement. It's out here, so it's an outside edge, and then you'd be looking for this. That's the same, or out here, back here. So those are the only trades. Where is it? Out here. And where to? Out here. There's the liquidity shows up. It's the same guy over here, maybe. So once we come through, and there's icebergs, if I get a trigger here, that's absorption. I can short it to go there. That's a mean reversion trade. And I think I don't remember where I posted that. So this is a short to there for your scale. And then you're trying to go, because at 9:30 Central Time, we have the IB stat. The IB stat, so it's not taken yet. So I'd be trading towards this and this. This is my plan. And there's the target. I don't know, And we have stops at yesterday's low a day, which I believe are sitting over here. So I have everything. No, I'm sorry. It was there. And then the next day down, we have stops under there. Let me just show you. So I'm trading into the stop. So the other stops are, oh, this already happened. It was here. So this is like the next place. So we had stops under here, yesterday's low, stops under here, and a target here. Okay. So fuel. So that's the trade. So I'm trying to get long is what I'm trying to say. I'm sorry, short into the statistics. Over 98% probability to take this out, and this is the target. That's all I know. So all I can do with this is trade short back here and then look to drop out the bottom. And that's called, that's a reversion trade. And notice where we go. Okay. So now I'm done with the shorts, my primary trades. Now what comes from here? So this, if you're in Trader Lab, you had a wonderful morning if you had a plan for this. Now this is a sweep. And notice where it happens. Can you get any more precise? Now, remember, trading has no precision. It's auction-based. It's like, why does it come here? Why did it stop there? It's the same reason. That it stopped there. This is the auction. So if we find too high, we're going to try to find too low. You see? That's what we're going to do. We're going to try to find too low. So if we go, oh, I'm not paying that, then what do we know? Well, stops are here, so they're out the window. And what about this? You see? Very logical, isn't it? It's very logical. And now retail. So retail down here, maybe too low. Retail in the developing time frame, maybe fair. So what do? I'm not paying that. Retail, and then down here, somewhere. And this is the somewhere. And of course, these aren't recommendations. So I already have a structure. And why does this exist here? It's because we ran out of buyers. In fact, we had our sellers, and this is all too high. And we ripped through here, urgency. Well, now, if we start doing this, and we can come up a little bit in here, there's going to be stops out here. So that's why it's what's mean about mean reversion is trying to pick the outside edge. So then it's only this to this, and then trade management or exit. When you design trades, it's not about holding the thing, for eternity. It's if you understand how the market works, you would just take it's called structured trade. So you just go there to there or there to there. You can trade it from anywhere, but this is where you're trying to go. And the further outside you are, the better it is. More range, more opportunity to get risk neutral. And why do we do this risk neutral thing? Because it calms you psychologically. You can better manage the lunatic, fight and flight, FOMO, and the rest of it. See the behavior? There to there. Where's my outside? It's out here. See what it does. Oh, there you are. So this is rotational trading. So what were we talking about? Here down to out here. not looking for new low a day, just this. You can build a plan, and then there's a couple trades in here. We're not trying to be whirling dervishes. We know the market is short, so we know that the shorts can get squeezed. That's why this is a limited, and it's a fine trade for me. If I'm taking a short here, I'm going here, and then I'm only going down here. Is this worth it to you? I don't know. It's almost 10 points. If it's not, you're just getting your Barca Lounger. We have a lot of Barca Loungers in the Trader Lab. You're welcome to try one of them. Because the idea is not frequency of trading. It's taking intelligent risk, not playing a video game. It's a strategic endeavor. It's not about frequency of trading. It's really about range, at least in my opinion, because the more trades I take, and I'm only talking about me now, not you, I find that then I have more risk exposure, right? That doesn't do much for me if the main opportunity is already done. Now, when I do have a shorter term plan, and it's not so much depending on range, I can be out here, coming here. This has good range for me, 8, 10 points to come to the mean. As long as I'm in this area and I'm going to be squeezing these guys out, I want them to come out. My outside edge where there's stops is here. If you're trading mean reversion, write this down. Outside edge, look left. Why? What does the market tend to do? If I run out of sellers, what is in the market now? The shorts who have buy stops who are trailing, which is us, retail traders. Write this down. Think like a retail trader. Don't act like one. Where's their stops? Well, VWAP and out here. And I have to be conscious of this. This is my last place. It was too high. As long as I'm underneath this, I can take shorts. I don't want anybody taking a short. Why take my stop? I take them. What's the big deal? Don't like them, but nobody likes paying bills. Casinos pay the gamblers. You always got to think about the business you're in. You're in a gaming business. So what do we know here? I've got liquidity here. I've got the VWAP. We have a structured trade in Trader Lab called VWAP, the VPOC. It's not mechanical. I have to look over here. Because this is the last place. Look at that. See the icebergs? A lot of icebergs, a lot of selling here. If I come up into this and take the stops, there is a possibility, I'm not going to say probability, possibility that these sellers, when the stops come out, if we get here, take the other side. Oh, really? You want to sell me some more? Hey, have some more. And then we have this. So this is an area to observe. Let's just try to watch the behavior. See if we can see a short. This is how reversion trading works. It's a specialty, and it's not a big deal. Most of the time, the market is reverting. Coming back here is reversion. Now, this will get you crazy because I'm talking in multiple time frames. That is the same as that. The difference is this is left over from last time we were here, retail price. And what is this? The developing retail price. If I come outside and sell it, I'm coming back to the retail price. If I'm in a higher time frame, I'm coming back to the retail price. Think Matryoshka dolls. They're inside of each other. Now, this is called the IBF. It's a structured trade, and it's not a long for me. It is a reversion trade. Subject to your plan, time frame, vetting, and, which way the wind blows, context, this might be a long. But what I use, under different conditions, it is a long. For me, it's not a long. What this is a structured trade that says get out of shorts. So if I'm taking a short to there, I'm now coming back there. Outside edge. Remember what I was saying. If I take shorts, I'm not trying to take a low a day. I'm just trading a rotation. If I come out further, I'm looking to come back here and come back here. Same trade to get the stops under there. I don't know about this. Not my problem or concern. I want the stops. When I say I want, this is my trade. I need for the trade to be the best configuration it can be to get these guys out. Now, they don't have to get taken out, but I have my VWAP, look where it is. So I can anticipate, and here's where it gets tricky, naturally. Where's the high of this rotation? Is it going to be here after I get into this, or is it going to be out here? That's the question. I don't have the answer for you because I can't. But I can do, though, is tell you what my plan is. And I don't call trades, guys. I'm just giving you an idea of structure. So let's watch it. Are you guys with me? Is this making some sense? How we doing in YouTube? Where can we find those probabilities? Any of you guys who are visiting in YouTube, Trader Lab is a community of serious business-oriented traders, and it doesn't matter how long you've been trading. It's kind of like a stew. You know, everybody throws something in the pot, but most of us come to Trader Lab because we don't have a sustainable business, but we do have random winners. And by the way, you could use a dartboard and trade with that. And when you're using indicators, in my opinion, and everybody's different with this, you're pretty much using a dartboard. And that's because you can't measure it other than P&L, and P&L has nothing to do with it. It's really edge. So the winning trades, unless you have edge, you're still losing. So, you know, I know for myself, I spent years trying to, quote, make it better. And what I didn't understand is I wasn't solving for the right issue. I was looking for certainty and confirmation to squeeze the risk out. It's very logical. But that doesn't exist here. So instead, I had to change what I look for. I look for statistical probabilities, and I accepted that I'm clueless. So I don't know what's going to happen at any location. But what I do know is I know that I have my sellers. So I know that, and what else do I have? Buy stops. So I have my buyers are built into the rotation, us, and I know that if I can squeeze out the stops and I get my icebergs taking the other side, and I see the order flow and the liquidity thickening up because they're selling, you see them, then I'm looking for a short come there, and I'm not going to call any trade. You know, you don't need to take my stop, but what I'm here for is to help you understand market mechanics. I have found that if I understand how the market works, since I don't have indicators, what I've done is I've changed this. For me, I'm the indicator. And what I'm doing is I'm taking these inputs, I'm processing them in my brain, and I understand how the market works. I understand what triggering structures look like and where the behavior might take place. And I understand that if I get my sellers and my absorption, that I can come here. That's all I understand. And is this justify risk right here? I'm not going to answer that for you. I know that the possibility of coming up here is pretty good. So if I see a short trigger, do I take this trade to there? Because that's that, and I can enter out here. You know, I wish, you know, I can enter on a hair, on, you know, head of a pin. There's my sellers. There's my press. There's my sellers. I don't know. Sellers, buyers are here. Buyers are here. Sellers take control. So the best I have here is a short here or right here. And that's where it's trying to go. I just look at this and I go, well, that would have been nice. Because until it does its thing, you don't know what it's going to do you. So this is a trigger, but it's not a location. So I can see triggers like here. This is a short trigger and it can go to the target and I'm not going to be on it. And I'm going to go, what's going to happen? The lunatic under the hood, Hyde, is going to say, gee, you should have took that. Right? Hindsight, very clear. But my plan says, don't take that. My plan says, retail traders are going to have their stops above the VWAP and my outside edge, the low volume, is out here. This is the outside edge. Am I better off waiting for this to have the range for the risk reward Or am I okay just putting around? This is like being on the putting green, putting the same risk on to try to get here. And yeah, the trade can work, but I don't have the trade location. What's the right thing to do? Well, for me, patience. Not, I'm not here. I'm not a whirling dervish. I certainly have the emotional triggers to take this trade, especially when it does. If it got there, I'd be, you know, you mentally, you're all over yourself. You shoulda. But here's the real answer to the shoulda. You shoulda wait for the location. And if it doesn't show up and you have no further trades for the day, that's what makes for a successful business. You start making these trades up at locations where it's not to your advantage, no matter what happens, you're on your way out of business. I created something years ago for myself called the error cost calculator. And if I took this trade, it's a FOMO trade, right? And even if it wins or loses, it's still an error. I would put, if this wins, I would subtract the winning amount. It's an error. If I put it on and take a stop, it's an error. No matter what I do, it's an error. What does that do for me? After keeping track of errors, and it was such a huge number, it was repugnant. I mean, I'm telling you, you could throw up on your keyboard. And I wrote a check out, and I always like to tell this story. And I put it on my monitor. We're talking substantial numbers. And it was like, gee, I'm throwing this away. Let's stop doing that. Well, that did it. And of course, a 2x4, to the head a few times. But, to change the behavior, to manage the impulse. I have the impulse right here. Why? This looks like it's short trigger, right? There's the sellers. There's too high in the micro. But I don't have any location. So I'm just hanging out. Let's watch this right here. And again, it's not a trade for me. I hope this is making some sense, guys. How you doing in YouTube? Hope you guys are having a good time today. By the way, I just want to remind you, I will not be streaming on Tuesday. But I will be back on Wednesday. So you guys are going to, in the Trader Lab, do your trade plans, discuss it, post your charts, be prepared. Microstructure. And again, I can't take this trade. But we might come right here, you see, because it has everything except location. Trading is like real estate, It's location, location, location. So this is the idea, but it's not the location. Often what I see, of course, is sometimes it gets there and sometimes it just does this and then continues to squeeze. It can do either. I can't tell you what it'll do because it's not part of trading. I can tell you what it might do, and I can tell you where it might do it. So I got my stops here, and this is important, this level. That's what I know. This, you see, it's right here, and they came in again. These sellers are selling again. There they are. Now, the thing that we need to be thinking about is once they're done, do they take the lid off the pot and this disappears, and then we push through into the stops and they sell more? Or are the sellers in a hurry and then we come here? This is what you got going on. This to this, not qualified, or out here, back here. Qualified if it shows up. I know. You're probably going, is that all? Yeah. What else do you need? Remember the objective here, not to gamble, to take intelligent risk with edge. Yeah, Vincent, I can't help you with that. You should, the mess on the chart, I'm not sure what you're talking about. These are icebergs. This is resting liquidity. These are tools. If you want to look at the liquidity, well, this is how we use order flow. If you have a dome, you could just look up and down your dome. You can see where it's sitting. You see there, just reflecting what's sitting over there. So you can see the same thing. But you don't see it, a historical. This is all historical. Everything to the left of this line is the historical heat map. This is what's happening right now. So you'll see this moving around here. These stay because it's where it was. So it shows us the past. So I know what was here, and I know it's still there. So it's pretty important to me. And this shows me who's participating. These are the limit orders. Icebergs. So this is a trigger that I can't trade. I got to put some levels back on from IRP. Let me do that. There's a free digital version of Bookmap that you guys can download if you want to play with it. It comes with some data, and you can kind of get a sense, or just go to bookmap.com, and there's loads of educational videos. They're very short on specific elements that you might have an interest in. So far, this is the reversion, right? So this is what we're trying to do here, but from out here, not from here. So we'll see what it does. Did I get my levels? Yes, I did. Okay, levels are going to show up now in Bookmap. They're coming out of Investor RT. So how we doing in Discord? How's the Bookmap Discord community doing? You guys having a good day? See the reversion trade? This is called mean reversion. So this is a reversion trade. And again, it's not a trade I would take. I really should be saying to you is the preferable location is out here. And it may still get there or it might not. Or we fall out the bottom. The reversion trade, the goal of this short is to go there from up here and then test down here. Okay? That is the trade. So it didn't get to its location. What's important is that you see that if you understand market mechanics, and it's got to meet your requirements. This is the condition of the market. I always suggest in Trader Lab, if you learn to understand how the market works, mean reversion, this behavior, is the most common behavior. And the other part of it, of course, is that while it's happening here in this time frame, it also happened here. That's reversion. So we're reverting there. It's the same thing as reverting here. This is left over from last time we were down here, so it's fixed. This is developing, so it moves around. It's the same behavior, though. And then when I get into microstructures and triggers, what is the behavior of the trigger? I'm just going to isolate this for you. So you can kind of see that if you understand reversion, you've really got a lot going for you. Now, remember, again, I'm going to say it's not qualified for me, but it doesn't mean that you can't trade it. What I do is not material. It's what you do. Because you got to know if trading here, other than this random outcome, actually has an edge. So where's the volume in here? Right here. Let me do it better for you here. I'm just going to go before it did anything. It's here. Here's the volume. This is how I use the profile. So now I'm taking it down into, I call them fractals, but think Matryoshka dolls. They're inside each other. So this is where the sellers are. There's the liquidity, no clue. The buyers are here. So you get seller, buyer. Again, it could do that or break. And look at about this one, break. Which one of these are you selling? What about this one? No range. What about this one? No trigger. What about this one? This looks like a trigger. You'd sell it there. Okay? You could just as well take a stop there. So it's not at a location. Okay? That's why I can't take this trade. But this is a trigger. And this one, you can see the difference. You see the change in behavior. This is not just a little blump. It's different. Now I know I have retail in here. This is a store. Sellers, buyers, sellers take control in here. Now, what do I know? That node sticking out is the retail price. And think of this like your convenience store down the street. A consolidation is where the interaction of buyers and sellers takes place. I mean, it's all over the place, but we can see it. And inside of this is the high volume or the retail price. So if this is too low, I can go higher. But if I break below it, now I know this volume might be too high. It's the same concept of this, but it's in a fractal or a shorter time frame. So now I have resistance, and whatever. So let's just look at the structure. Where's my resistance? Isn't it there? So I could sell this here. Again, it's not qualified for me, and my stop would be above here. And then I'm going there. I'm just showing you the trade. It's a trade. It's nothing more. So, and there's the target. Again, not my trade, but behavior. I want you to see behavior. If you understand how the market works, you would understand why we would come here. You see, is this making some sense? Donald, this would not be a location for me. I'm not trading this. I'm trading the current auction. This is the high volume node in the higher time frame. Yes, but it can do anything. But my current behavior, which is I'm trading the current auction. This is sitting here from a higher time frame. What is current? Out here. So, and let's go back to the developing time frame, which is what we are trading. Where are the stops? They're out here and out here. So I can't, this is where I have to be concerned. Right there. So this doesn't matter to me in the developing time frame. Neither does this. They've already happened. I'm now trading the most recent auction, which is this thing. So and for me, I can only I need more range. So I have the VWAP. And I mean, this is an area for me to trade, this is what I have to be conscious of. And if I forget about this, I might be stepping in front of retail stops. What I don't know is how far out are we going to come? This is part of the joy, of randomness. And it's going to be random. What I know is I can't sell it there. Other than you see what it did? When we get this behavior at an appropriate location, it's the same. So we're going to look for something like this out here to come there. Same trade, okay? Unless, now let me tell you the unless we motorboat through all of this and then we can't get back. If we can't get back, and because we hit our primary target, we might be finito. So we'll see. Did that answer your question there, Donald? How we doing in Trader Lab, guys? So this is the idea of this thing. You take this stream today, and you know what the primary part of this is? It's not the trading. It's the preparation and understanding the current condition of the market. Then you come into the market, and it's like, okay, who takes control of the ball? Who's vulnerable? What happened in the ETH? What happened in yesterday's RTH? What did not happen today? What is not happening? Well, on the open, what do we got? Longs. Well, if the market's long, what do you think? The market goes up to go down, down to go up. It goes up. And this was the NVIDIA thing, and it missed this support, goes up to go down, back here, opens, tests, go up, goes up to go down, goes down to go up, or that's it. No clue if that's the high of the day, the high of the move, the high of the century. It's not my job. I'm not in the prediction business. It doesn't work. I'm in the alignment business. So my job is to get an alignment, however I can do that. And what am I looking for? Outside, right? Where's it going? Outside. And this isn't that I'm clairvoyant or I know what it'll do. I don't know. But we have to take and look at what we know. We know that the market now is short and that there's stops sitting at these outside edges. We know that the market, if it runs out of sellers, it's got buyers. The buyers are the shorts. Buyers buy stops, up they go. And we might have some longs, who knows. But if I get longs and these guys who are hanging out in here go, oh, really? These icebergs and these passive sellers up here, and I get into the stops in an area, I then will start taking shorts to come here. That's it. It's mean reversion. Underline the term mean, and that's what I got. Icebergs. And see this LVN, this is the lowest volume at this outside edge. When you come outside, the objective is to come back. And this is the mean, so it's the reversion to the mean. It's shopping. Somewhere in here, we might find too high, where we run out of buyers, and the buyers might be the stops. We run out of stops, and we don't have new initiators above them. We can rotate back the other way, because we might get our sellers, run out of our buyers who are stops, and then revert. That's the trade. I know and that's the only trade. I mean, what else do you need? If you know your trade and you know your location, you wait. Now, I know there's many retail traders that think we're playing a video game. I think it's better to go to a casino and get entertainment. Now, we've hit our primary targets on the short side. So for me, all I have is shorts, really this thing down to here. So my trade, if I get a short, is there to there. I already know it. It's my trade. Doesn't mean it'll work, And I typically will take 1 or 2 shots, usually 2, if it has it. Because if I get in a bad location, I'll take a stop, and it doesn't mean that the trade is bad. It just means it was not in a good location, and I won't know that till hindsight. Now remember, what am I looking at? I'm looking at out here. Now I have to be careful right here, because once I come, and there's this liquidity, so I can be looking at this, but the better idea is to get through here. So let's see what it does. Not a trade recommendation, guys. We're all clueless. Does this make sense? Can you see why you wouldn't take a short here, but you want it to come up? So a line on a chart doesn't mean anything. That we have a structured trade in the Trader Lab called VWAP to VPOC. It's a reversion trade. It is this. But because of the stops, I have to be very careful here. And it's not unreasonable that I get a rotation here, because there are mechanical sellers, the retail, the gamblers, and they might be right. It's not that the gamblers don't get paid. I know that the better location for me is to get the stops out. And now I have this sitting up here, and I have this. Why would this liquidity come in over here? I'm going to give you a guess. That's all it is. They are looking to take the other side of the stops above this swing. And it's a guess, guys. It's not a it will. It might. So we'll get to watch this together. I do want to encourage you to watch this stream. And it's not about any individual trade. That's not the issue. The issue is what goes into preparing for the day and being confident in your plan and then what you look for. And if it changes, you have to also define change. Then you're going to go, oh, that's nice. I'm zigging and the market's zagging. What happens? You'll take a stop. All right. Can't be crushed by cost of production and overhead. If you have an edge, it's the same as the casinos. Paying the gamblers is overhead and cost of production. I'm sure if they could have figured out how not to pay the gamblers, they would have figured it out. They can't. So this is a trade lab trade. And I will tell you, I wouldn't take it. And this might be the trade of the century to come here. That is the trade. I want this. Because now I know I'm further outside and I got these guys out. And they may hit the home run, and that's okay. Can you guys see why this might not be a good location? And it can be, because this is a structured trade. It's called VWAP to VPOC. You see where this is, and you see where this is. That, for me, is really meaningful. So this right here is your micro high volume. This is your over under. You see this little notch? This is your quote micro VPOC or high volume node in this little micro distribution. So too high, too low, retail. If I break below this, I can go down. If I push above it, the squeezeteria continues, and I'm back into looking at this. You see, I have no short. And I'm sure in Trader Lab, there's a lot of jaw clenching going on right now. Is that right? You're too bullish? Well, we're in a bull market. So bullish is okay, but currently that isn't what's going on here. This is very important right here. We either break low from here and go here, or we continue to squeeze. You just have to be willing to take a stop if you trade right here. This is really where things, so for me, I would like to trade out here. If I put this trade on, I either have to have my stop further out. If I take this, I have to be out here. Or, so if I take a short here, I'm out here. Or I wait for this, and then because this is a preferable area. Either one. I'm just telling you what I would do. I'm okay. See, here's me. I have a much different perspective probably than a lot of you. Trade 46 years and there's no sense of, oh, I don't have to do anything. What I want, and I don't get it. So if this does this, the lunatic's going to go, you should have sold it. All right. Yeah, you're right. Except I know I have a better opportunity out here than I do here. So that's me. And remember what's driving this. This. So I have to not ignore this. So now you know. This is all I know. This is all I need. And I know I got this. And I'm going to let it pass. And then I got this. I'm interested in this. And there's another reason. Besides the stops, it's the outside edge. And the reversion trades are outside. The problem naturally, like this, how far out? You saw this one, not qualified. It got there. Now we have this one, not qualified. And it looks like it's going to push through. So this is why I can't take this. And I don't know if it's going to push through. So let's not think I know. The reality of trading is, you don't know, because it's random. What I know is, where do I have an advantage? And it's not stepping in front of these guys with their stops over there. My advantage is out here. So I've been talking about mean reversion. That's all I'm talking about, right? How do I trade this? Okay, I have to be very careful now, because this might be the low of the whole thing. And if I get aggressive buying and I don't get, if it doesn't go anywhere, I'm at my location. Now I'm going to stalk it and we'll see what it does. And this is not a trade recommendation. So you see, now I'm watching. Let's open it up, try to see what we can see here. So where are my icebergs? I got my stops coming out. Let's see. I don't call trades, so I'm just telling you these are areas to observe. I don't want anybody taking any trades. I take stops. Don't take my stop, take your own. We all take them. Location, not precision. Location. Outside edge. So I'm waiting patiently for location. Let's go back and make sure we got our location. It's out here, wherever this high of this thing is. So this is it, okay? So I'm in here and I'm looking to get short. So that's it. And now we're going to wait. Need a trigger. So I'm looking for a change in behavior. I don't have it. Do you see anything going on here? No. Consolidation. I don't see my sellers yet. My stops are going to be up in here. So I want to get up in here or here, but the better thing is to break through this and break below it and get my icebergs. Okay, right here, I'm running out of buyers. Right there. This is where your teeth chatter, you know. So let's just watch this. While I'm waiting on this, you guys have any questions? Justin, how do I count for end of the month? I don't trade the end of the month. I trade what's on the screen. You know, I don't really think much about it. I'm a minimalist. I align with the participant behavior. That's what I do. You got to watch this very carefully here. This is important. Remember, this is important right here. We're in the area. This is important. See if it does it. Now, if it pushes through here, I'm still looking to short. Okay. So if I take this short, I'm going there. If it pushes through and I take a stop, I'm putting it back on again. Go there. And I know I've been probably boring you with this, but that's how you, I think, how you trade. You know. So anticipate behavior. Know where the location is. Understand market mechanics, where it might go up and why. And then when you put this trade on, if you took this one, you have to get risk neutral. That's job number one. So what you can do with this is, if you get short here, and let's just assume your stop is, you know, 73, 75 and a half, 2.5 points, you need at least 2.5 points to buy the stop on your runner, which is going here. That's as deep as this is. Nothing more complicated than that. Can you do this? Better question is, do you want to learn how to do it? And do you think this might help you? I don't use any indicators. And the reason is random inputs in a random environment creates garbage. Anchored inputs. This is anchored. What am I doing? I'm trading the auction. In other words, how the market actually works. I have structure, which I was waiting for out here. I did not take this, even though I read it, not at the location. And you see the reversion. This is the condition. If I take it from out here, I have better risk reward. And taking it here, when I know I got stops here, is that equal to this? No matter what the outcome is, this is the better trade. I've got more range and more opportunity. Now, I would be risk neutral. And if it comes above here, what happens? I scratch and my broker sends me some Omaha steaks, which would be a change, and versus a gift basket. And then here. So look at the risk reward. Now, this is not the final target. It could be. But the worst that happens is I scratch. And if I come up in here, now I have to be conscious that if I pop this and I come under, I would sell it again, same trade. If I get through here and start motorboating along, I'm off the shorts and I'm back in the Barca Lounger. I hope this makes sense. And I hope you guys are getting something out of this. Yeah, there was a trigger. eBay, buy and sell. Hi, haven't seen you for a while. Justin, again, I don't worry about end of the month or a full moon. Do I anchor my VWAP? Yeah. Questman, yeah. The RTH VWAP, it just starts at RTH open. VWAPs have a place for me. They're not a big deal, but they do have a place. I have structured trades with them. It's just not material to me. Other traders use VWAPs and are very ecstatic about them. VWAPs have a place. It's another way to look at volume. This is a volume weighted average price. The high volume nodes are the high price. So this is an average. So the average of sellers are above here and the buyers are under here. You see? So I know if I'm under here, the sellers are still driving the bus. For me, though, the highest volume for the day at the moment is right here. The nature of the market, if everything's going south of the border, is going to come back here. And I say nature because it doesn't have to, right? The trigger is right here. This whole thing. And remember I mentioned one buy stop? Do you know what this is? Here's something. This is the only thing I use from all my years using indicators and building trading systems. It's this. Stop divergence. What do I have? 15 buy stops. Now remember what I've been saying. I'm saying is who are the buyers? The buyers are the shorts getting squeezed. And then if I get some exhaustion, there's a seller and there's liquidity. So I have alignment and there's only one buy stop that's showing up here. And it's higher price. What is that? Isn't that divergence? Higher price, less. Divergence 101. So I have that. I have this, and right here, you could be selling it, and then you've got to get risk neutral. And then it's either going to take you out, which is fine, or it's going here, which would be better. Now, if it takes me out, all I'm going to do is come a little further outside, see if I can see absorption, and if I get more liquidity coming in. If we come back up and I see this pull, then it's opening the hatch, and then I know I'll get taken out. And I let myself get taken out. I don't get smart. Because getting smart when you're in a trade is chemically induced. Oh, it's going to take me out. And what do? You bail out of the trade. Now, what's the probability that this trade's going to fail? I don't have a percentage for it. I don't know if it's going to fail. So the only way the trade fails is when it violates structure. And then I scratch. In the past, I can't tell you how many times I go, oh, this thing's no good. Get out here, and then it ends up going there. That's an error, right? Because my trade plan says, take your stop. Because the trade has to fail, not me being emotionally triggered by the lunatic who doesn't want to give 10 cents back. You know, oh, I'm going to get stopped out. Let me get out before it hits my stop. I have a photo of screenshot of a trade I took. It's got to be over maybe 15 years ago. It was such a great trade. I was in one of these, And my stop was like, let's just say here. The market came up here, and I punched out of the trade, like here. It never got to the stop, and it went down like 30 points. And I got out of the trade to save like 2 ticks. Let me ask you, what do you think of that? Have you ever done something like that? Kurt, the low volume, Kurt's asking about low volume nodes. What do they mean? Okay. They don't act as support and resistance per se. They are outside edges. So we can say it's resistance in a way because it's not a line. What a low volume node is that the market ran quickly and it didn't consolidate. Like down here, there's a lot of volume. When we come outside here, this is created because of speed. And that speed is on auction. And there's stops at, and think of it like swings, like this is a swing. And what happened was this is your, I'm out of here, I'll catch you much later. No auction. It's the Acapulco cliff dive. Then you come back. It's not auction. So we know that there's stops sitting above this swing and above this, which is why I couldn't take shorts. Once I come up here and here, and I know I got to deal with this. So my area is out here someplace, you know, and I know, like any other trade, just like you guys, I can get hit with a hammer. But this is the short. Let's look at the trigger. Who was asking me about triggers? If this, and I have my stop divergence, don't forget. I'm going to draw a little structure for you. I want you to see ways into this trade. Try to see ways into this trade. So you don't have to be chasing this thing around and getting fooled. You're going to get fooled anyway. So this is our trigger that we're talking about. So right here, we suspect we have stop divergence. We're at a location, right? All this is before the fact, and we don't know, right? VWAP, outside edge. This is the area. I know I'm beating it to death, but this is trading. This is too low. This is the outside, not auction. When I come outside, and why am I going up? Buy stops, unless there's new buyers, and that part I won't know. What I do know is if I run out of the stops, and now these guys step in again, and this stays in here, and there's my trigger. Now there's a change. You notice, when's the last time we had one of those? Wasn't it here? Wasn't it here? It's not one of these little shake and bakes. It's this. There's the trigger. Now right here, you're jumping out of your chair. I missed it. And you're going to hit it here. Where's the outside edge? This is the short, and the stop is there. Let's look at the structure. See it? Not a recommendation. You can enter there, put a stop there. These are not trade recommendations. Or if you're more adept at this, you'd be short from here. You'd be risk neutral. So it's there. Stop up there. There. And of course, you can get stopped. Targets here. Anyway, I hope you got something out of this today, guys. Keep an eye on this. Remember, there won't be any stream on Tuesday. I'm going to miss you all. Hope you guys have a great holiday. Markets are closed in the U.S. for Labor Day on Monday. There's some great streams I've done the last couple ones targeting all-time highs. Definitely watch that one. I have a lot of real-time narration in there once I lay out the plan. The business of trading is plans, edge, discipline, humility, protecting your account and your psychology, and just looking at this like a business. If you build a business, what do you think? Are you a gambler, or do you want to learn how to do this? I use no indicators. This is language. Can you speak market? You can learn how to speak market, and then you can build it out to any way you want. But if you don't understand fundamental mechanics of how the market works, why it does what it does, you're going to keep waking up in the same place. And if you don't have a statistical edge, in spite of the random winning trades, you probably will not have sustainability. If you're looking for sustainability and build out a business, Trader Lab might help you towards that end. Don't forget to give a like, subscribe to the channel if you haven't done that yet, but definitely leave a like, support the stream. There is no cost for this or the Trader Lab community. There's the library of webinars there, a document section, and the community itself. There's a link in the bottom of YouTube. Feel free to use it. Visit the Trader Lab. This is called mean reversion. And I always say, yeah, it's mean, because where's the outside edge? What did we know? It's out here. It's not there. Hope you got something from this, guys. This is the Trader Lab, and I believe anyone who comes to Trader Lab can learn how to trade. And then again, it's up to you to vet everything and develop a business plan and determine, are you going to be a gambler or do you want to sit on the house side of the table? And of course, past performance is never indicative of future results. Take care, guys. Have a super weekend. Do your homework. I look forward to seeing you guys on Wednesday. Trade safe. Trade with a plan. Take care.